With me now on set, tax attorney Rebecca Walser, chief marketing strategist and CEO of Market Rebellion, Mark Lopresti, and host of the Afford Anything podcast, Paula Paint. Good to see you both, or all three of you. I keep saying both. It's usually two guests. What's going on, guys? How you doing?
Good. Yeah.
Mark, I'll start with you. When we're talking interest rate cuts, I always look at small caps. Mm-hmm. They're up almost 4% today.
They are.
They usually predict what's coming down the pipe. Wall Street is smart, you would think, mostly. What's going on?
Street is celebrating, Bob.
Yeah.
We didn't get quite the dovish pivot that we got last year, Jackson Hole 2024. We all remember his last Jackson Hole jamboree. I'm going to get invited at some point in time. But look, it's the signal that the Street wanted, and here's why it matters, and here's why I wasn't surprised, Bob. Earnings, we had a spectacular earnings season, one of the best on record, according to most people, even Goldman Sachs saying that. Corporations not passing down the cost of tariffs to the consumers. They can continue, I believe, for the foreseeable future to absorb that. And that 25 basis point rate cut that brings the cost of capital down for corporations to continue to hire and invest means they will not have to pass the cost of tariffs down to the consumer. That's good news. The Street celebrating 900 points up on the Dow, the S&P, the NASDAQ also almost up 2.25. I'm having a good Friday, Bob.
Big day on the market. I know Powell, he was saying for a long time that it was tariffs, Rebecca, that he was giving them pause to lower the interest rates here. Don't have it, as Mark pointed out. So what do you think?
I think that, to his point, he's right. He would probably love to keep dry powder on the side and just wait for the impact. But because it keeps getting delayed and China really obviously is a deal that's going to take a while to really finalize, he can't just sit on the sidelines with PPI, with CPI, and with the labor market.
All indicators looking well, right?
Yeah.
Okay. Paula, your thoughts?
Well, I think this is something that people have been hoping for a while. And last month we saw a dissent in the Fed. So I think that he's getting pressure from other Fed governors as well, who are starting to see the light and who are starting to see that Jerome Powell has had a history of being too slow. We all remember in 2021 when he famously declared that inflation was transitory. He has this history of being a little slow to respond, and I think he's finally realizing that, and other Fed governors are starting to see that as well.
Yeah, let it go. Let the markets go. I think there's a lot of people out there who want to buy houses, right? Yeah. Some people want to sell. Let's talk Canada. They're going to drop some of the retaliatory tariffs. I think that could be good. I think it's a good step in the right direction. What are you reading into that?
Absolutely. Look, the Street right now is basically pricing in that the tariffs, when all is said and done, across the board with our major trade partners, will come in between 10 and 15%.
It was unpredictability, but it's predictable now.
It is.
Almost. It's baked into all this.
Yeah, it is. But I mean, look, the good news of this, Bob, is everybody wanted you on other networks, wanted you to believe after Liberation Day that we would be by now in August in a recession. Pandemonium, dogs and cats living together, mass hysteria. Right? I mean, yes. And I don't know about you. I just came back from vacation. Everybody's spending like it's going out of style. The American consumer remains strong, the economy remains strong, and earnings season gave us, if you're Jay Powell, you're data dependent, here's the data, baby. It looks good. Something
I don't think President Trump gets enough credit for, the foreign investment, private investment.
Oh, absolutely.
Trillions. Who else could have brought in something like that? I want to have this conversation of when do we start seeing the fruits of that labor that he's bringing in and the development? It's going to take some time. Walk us through that.
Well, we already are seeing positive net tariff revenue, so that's already coming in. And obviously foreign direct investment, especially if it's related to plants and equipment and stuff like that, that's going to take us a longer runway. But it's exciting that he's actually caring about it. We always talk about foreign direct investment in the Asian countries, in UAE and Saudi Arabia, and then to get it this way, it's like, finally, yes, like, let's make that happen. And, with the CHIPS Act, the Genius Act, all of these things are bringing the AI to the forefront. We've got to have manufacturing back here. So that's really something that on the long side will give us more upside.
Paula, your thoughts on that?
Well, I think what we saw is with the jobs report being revised down, with the terrible jobs revision, we need those, to your point, we need those jobs to come back here. And I think that what Jay Powell is finally realizing with strong GDP, but a revised downward jobs report, is that it's time to start spurring the economy. If we don't start spurring the economy, making the cost of capital cheaper, releasing that lock-in that many mortgage holders have, so that people can start trading houses again. People can get rid of that low-interest loan that that's keeping them shackled to the home that they're in. We can start to see more transactions, more growth.
I think so. Let's talk about one other thing, kind of some inside baseball here. One of the Fed governors here, maybe in some trouble for some mortgage fraud. President Trump commented on that here and maybe firing her. I want to bring up that soundbite.
You're going to fire Lisa Cook, the Fed governor, over her
Yeah, I'll
mortgage
fire
fraud?
her if she doesn't resign, yeah. What she did was bad, so I'll fire her if she doesn't resign.
It's Lisa Cook. Okay. You think anything nefarious went on there? And, no one's above the law, right?
No one's above the law. As you know, Bob, I'm a retired lawyer, not current as you, Rebecca. But and so innocent until proven guilty. Of course, nothing's been adjudicated. There's been no formal proceeding enacted. But here's what we have, and I think that's what the president's focused on. We have 2 mortgage applications that she signed. Both say primary residence within 3 weeks of each other. It don't look good. And here's the deal. It's not if it's Bob or me or Rebecca or Paula.
Right.
It's a Fed governor and an economics professor.
Exactly.
They're held, if you're a Fed governor, you have that post, that public trust, you're held to a higher standard. Something is fishy in Denmark.
Something's fishy.
Yeah.
It was big enough of an issue for them to send one of Trump's first administrations to jail for it. And obviously, look what they did with Letitia Jones and here in New York State.
She's
they went
accused
after
of the same thing.
That's what I'm saying. They go after the Republicans. But if you mention this on this side, a Biden-appointed person, it's like, oh, well, we'll see. We'll see.
She was applauded when she showed up at Jackson Hole today.
Yeah.
So a round of applause.
Paula, anything else you want to add there? They're telling me to wrap.
I mean, it's absolutely brazen. 2 primary residence mortgage applications within 2 weeks of each other.
Kind of seems
that is brazen. It's one thing. The Atlanta mortgage that she has. She took out a primary residence mortgage, and then 14 months later, she listed that for rent. Okay, 14 months. It's reasonable that your life might change in 14 months, and you might move primary residences.
Yeah.
But 2 weeks. 2 weeks between the Michigan property and the Atlanta property, there is no justification for that. She pledged that within 60 days she would move in, and she certainly could not have moved into both of those properties within 60 days.
A neat trick.
All economic experts, you make money. You all have great tans. You must have been vacationing this summer, somewhere exotic, and I've been here working, and I'm jealous. All right, they're yelling at me. I got to go. Rebecca, Mark, Paula, thank you.
Rebecca, let's talk about Intel. What can you tell us? What's happened here, and what does it mean for the company? Can you just give us a quick explainer?
Well, I think, what's happening is that if you look at the CHIPS Act under the Biden administration, there was about $52 billion of grants to actually build manufacturing plants for these chips here in the United States. And the problem is that we're getting foreign direct investment into the United States from foreign countries. We're investing in ourselves, but we're not getting any return. And because we know that we need more actual capital into the United States federal government, we're running just massive $2 trillion plus deficits a year without war, without pandemics. We have to figure out a new way forward. Now, I'm not suggesting that I don't love capitalism, because I do, but this is Trump basically saying, instead of just giving you a grant, let's take an equity stake and let's get some back. This is definitely going to go to the Supreme Court. It's definitely going to be litigated, but it is a new way. I kind of think of it, Sarah, like a sovereign wealth fund, like Saudi Arabia, UAE, who basically invest but then gets a dividend back on their investments. Even though those are kingdoms and not republics, this is a concept along those lines.
Yeah, it makes a lot of sense.
Yeah, but we're going to have to move on to the biggest story, as we mentioned.
Headliner. Yeah.
Headlining here, breaking news, Cracker Barrel debuting the new logo, simplified, removing the man resting on the barrel and, well, the barrel too. The new logo is part of the chain's All the More campaign. It marks the first time in 48 years that the logo has changed.
Yeah, so we know this new design is sparking all kinds of backlash online. The president's eldest son, Donald Trump Jr., even weighing in and writing on X, quote, WTF is wrong with Cracker Barrel. Thane, what's happening here? Why is this story captivating the American public? And have you ever eaten at a Cracker Barrel?
No, I don't even know what it is.
Oh, my God.
Maybe I'm not the first person, the right guy to go to on this. It's a restaurant, right?
Yes.
But from the logo, this is what I can tell you. I can see that this is emblematic of sort of the contempt for middle America. And that's sort of really the argument against this, is saying that what we've seen that seems woke is that that's anything, the corner store, the white guy that runs the store. There's something that we're living in an era where we have appalling lack of patriotism, as if to say, get rid of the white guy and his store. We don't really need that guy there. We just leave the barrel.
That sentiment exists,
But
yes.
they took the barrel away too. That's the thing.
The sentiment, it's called Cracker Barrel. The sentiment exists. I'm just not sure this is an example. What do you think here, Charles?
Well, I don't often do this, but I got to say, don't know what the outrage is, and I don't care.
But do you know what? Let's actually go, wait. who we got on our panel here that can actually have an expert opinion on this? There he is. Go on,
I
Seth.
know he's eating.
How about the guy from
I want to go.
go on the Cracker Barrel, guys?
So Seth spoke about this yesterday. Go for
Here's
it.
the key fellow, guys. There is a difference between a logo and a brand. And Cracker Barrel has a brand. And what is that brand? It's taking me back to Mamaw's house. Because biscuits and gravy are mediocre. And what this logo has done is now try to make it more IHOP, to try to appeal to a different generation. That's not what Cracker Barrel is. It's Mamaw's house, and I want to go back. They lost their brand. And that's the issue here. They lost
agree,
the brand and the logo.
but that doesn't make it woke. Rebecca, 20 seconds to you. Does that make it woke, though? Is this a movement for wokeism? Is this what's the guy's name from Budweiser? Dylan Mulvaney. Is this a Dylan Mulvaney moment?
I mean, I don't know what it is. Why get rid of the barrel? Why change it? I love their food too. Like I'm a down-home Southern girl. I love it. Keep it. I mean, what's the problem? I mean, let's stop being woke. Let people be different. We need diversity and everything diversity. So I don't agree.
I don't care about the logo. Long as they don't touch the hash brown casserole, we're good.
And the fried chicken.
We're good. That's right. That's exactly right.
All right. Well, guys, thank you so much for joining us. We appreciate you breaking down all those stories for us, especially this big Cracker Barrel debate. All right.
Cracker Barrel Gate.
Cracker Barrel Gate. Yeah, exactly.
Thanks, guys.
Thanks, guys.
So for help with that, we're going to bring in Chief Market Strategist and CEO of Market Rebellion, Mark Lopresti, and tax attorney and president of Walser Wealth Management, Rebecca Walser. Good morning to you both. So happy you could be here today. Okay, Mark, let's just start with you. Wall Street rallying to its best day in months on Friday. This, of course, after Jerome Powell, head of the Federal Reserve, hinting at an interest rate cut that could be on the way. What did you make of his Jackson Hole remarks?
Well, first of all, good to be with you this morning. And yeah, the street celebrated in a big way on Friday because we got the sentiment that we wanted from Jay Powell, which was it's time to make a change. And there was a lot of volatility in determining whether or not that was going to happen. There was some dissent among some of the Fed governors. We looked at the minutes from the July meeting. That CME tool that we use to determine what the Fed's going to do was going up and down, 85% chance, 65% chance. We are comfortably at an 85% chance this morning. We're going to get that first cut we need so desperately in September.
We've been waiting and waiting, and President Trump has been begging and begging for a cut. But Rebecca, the U.S. government making an $8.9 billion investment in Intel stock, giving the Trump administration a whopping 10% of Intel stock in control. Rebecca, what do you think of this announcement, and what will this new deal kind of look like with the government now involved?
Yeah, this is a sea change. You know, President Trump basically said we paid nothing for this deal. So that $8.9 billion that you're talking about, $5.3 billion was from the CHIPS Act under the Biden administration, another $3 billion plus from the Department of Defense. And so technically we're not buying the shares, but what's happening here is that we're actually getting ownership of a publicly traded company, Intel, for a grant that is done at the federal level, and this is to keep these manufacturing plants in the United States, to make a commitment to manufacturing these semiconductor chips in the United States. And it really reminds me more of like Saudi Arabia, the United Arab Emirates, where there's sovereign wealth fund. They do these things at the government level, they fund them at the government level, and then they get ownership rights. And that's a unique arrangement for the United States. I'm sure it will be litigated. I'm sure this will go to the Supreme Court in some capacity. But to be honest, you know, if you look at Powell's comments from Jackson Hole on Friday, there was an undertone of we really kind of need to be more accommodative, which everyone in the market loved, of course, to Mark's point. But also, he also very mildly indicated that the 2% inflation is going to be problematic. It's very problematic to have an accommodative Fed, increasing stimulus, and yet maintain very extremely low inflation. So we are looking at a sea change. And I think this Trump administration is really trying to find a unique way forward to basically get our bang for our buck in our country.
Yeah, Mark, you've been nodding your head. I would love for you to weigh in on this.
Well, I often agree with Rebecca, and it's unfortunate we're not together on set this morning as we were on Friday. But yeah, listen, I think this is a great move. This is part of President Trump's Manhattan Project, as it's been referred to. And it's not just about, as Rebecca says, she's completely right, making investments that make sense like so many other countries do with their sovereign wealth funds. By the way, President Trump's talked about establishing a sovereign wealth fund here in the United States, which I'm all in favor of. But this is also recognition of the fact that chips like this, Intel in particular, are actually vital not only to our economic security, but to our national
Yes.
security. I was talking to the CEO of a drone maker the other day, publicly traded, so I can't say which one, and he was lamenting the fact that so many of the drones, the majority of the drones used by our U.S. military, have chips in them that were made in China. That is an unbelievable vulnerability. It's got to change. President Trump recognizes the need to do that in a profitable way.
Which is huge. Again,
Yes.
our national security, just absolutely vital. But switching gears here, Nissan delaying its production of their 3 new electric SUVs. This at its Mississippi plant until 2028, citing customer demand and market timing as the reason. This comes as the president really signed the big, beautiful bill axing those EV tax incentives for customers. Rebecca, what can the average consumer really anticipate from this move? Is there still a high demand for these EVs?
I mean, I think that there will be, and it is coming, but, we have electrical grid problems in the United States, so that's kind of a problem. We've seen, obviously, Tesla, sales go down immensely, and Nissan is saying that has nothing to do with the big, beautiful bill, but let's be honest, they were really relying, they're really a lot more accepted in Europe and Japan, and they were really relying on these EV credits to boost demand in the United States, to really aid them in that demand, and if it's not going to be there, then they're saying, well, we have a lot more demand in Japan. We'll go ahead and, because they're moving out of Tennessee, we'll make these in Japan, and we won't have to necessarily rely on the EV credits in the United States. But obviously, this is the wave of the future. Autonomous vehicles are really going to be what's really going to take over the market in the next 5 to 10 years. And so this is just going to set Nissan back in the United States for that transition to autonomous vehicles.
Yeah, very, very interesting stuff. Mark, Rebecca, thank you so much for joining us this morning. Fantastic conversation. All right, everybody, coming up, former